everybody, my name is Adam Meyer. I'm back with another video. I know it's been a while. I moved into a new place. I got a puppy. But besides the fact, I've been doing a lot of research on investing. I know the market's coming down, and I actually kind of like it. It's a lot of good investment opportunities if you want a dollar cost average. But I've really been paying attention to like what the Fed is doing, and basically as things are going on now, possibly a war with Russia and Ukraine, which could spike up a lot more. Basically world war issues if anything did come to that. I don't know if it's going to happen. I don't necessarily think so, but it's possible, and the markets are reacting to something like that. So I've been really up to date fundamentally of what is going on besides the technical side of just charts. But let's get into it here. Alright guys, so we got this chart here on Bitcoin. This was the chart I was showing you last time in a YouTube video about a few months ago. But Bitcoin was up here, and it was when the SEC finally released an ETF. And since then we've come down. I'm actually liking this pullback. We're getting better deals. I was personally trading this on some of my accounts. I'm also a long-term investor, and I'm not even touching those. But 50K was my region, like right around in here. And if it was gonna break this level, which it finally did, I noticed it was just weakening, and finally on this pump, and then it started to show rejection. I sold a good amount out of my trading account, and then I've been buying it back slowly down within here. But long term, I'm really thinking we're still gonna be bullish, but more on the short-term basis. If it does come down, I'm looking at the 20K range, down within this area, down within here. It's definitely a good buying zone, in my opinion. This isn't financial advice, but it's where I'm going to be picking up a big bag if it does work its way down here. But in the short term now, we're looking for some type of pullback and possibly a reaccumulation to buy back up within this range, up within here, and possibly all-time highs again, because on the weekly time frame, we're just forming another higher low that's sitting right around here, around 30K. And if it does break this previous low around 33, 34K, we will be possibly working our way back down in there. As everybody says, no, I'm not a fucking wizard, bro. Like, we're gonna do what we're gonna do. So like, let's just fucking do it, you know? So it's either gonna buy up down here and then go long, or we're gonna pull back and come down here into the 20K range and then work our way back up, or consolidate down here and then work our way back up. Scrolling into what's happening right now, we are pulling back within this range. We created a new high, so we made a lower low, and now we just made a new higher high. Because here's a previous high right here. We made a lower low, and then we made a new higher high, and this could possibly be a new higher low to form up to possibly bring us higher. And one thing I want to keep in mind with everybody is that Bitcoin has been correlating pretty well with NASDAQ. As you can tell, NASDAQ has been bearish the past few months, just like Bitcoin has. And it's not correlating perfectly, but it's following a similar direction on the higher time frame. And I believe it's doing that is because it's a more investable asset. There's more money in it now, and it's an asset that's going to follow along with other regulatory assets such as the stock market. For example, the past few months I've been pretty involved with what the fundamentals are doing and what the Fed is doing, and that's why I've been putting that focus in towards Bitcoin, because nobody wants to be buying at the high. I was buying at the high, I'm going to be completely honest, but then I was slowly following positions, and I didn't take that much of a loss on my bigger positions, because my average buy-in, we're probably still down here because I started buying at 8K. I don't know exactly my average buy-in, but that's what we're looking at there. But for you guys, if you want to just follow this asset, dollar cost average. It's very simple. Buy low every single time it makes a dip. Not financial advice, but that's the easiest way to do it, because long term, we all know what's going to happen. All right, guys, I'm going to get into some stock market news here. Russia and the Ukraine, the tensions begin to ramp up. So the soaring sentiment came after U.S. officials said they estimate Russia has built up around 190,000 military personnel near Ukraine. If they do invade Ukraine at like a big cost, then it might cause a big stir up within the entire world. Oil prices will probably rocket, and usually when we see oil prices go pretty sky high, it usually causes a recession. We're already in a fear of a recession. The economy is strong, but with the Fed and now this hitting, it's all like coming together. But here's oil. And as you can tell, we are pretty damn high here on oil based on this chart here. Back in 2008, we were ramping up well above 100, and then there was the recession. And the last time we see some euphoric, massive move like this was back in 2008, 2009. And we are seeing something similar to this. We don't know what is going to happen exactly, but this is just something else to correlate with a previous recession that's happened in the past. So back to this news article. Really, it's about Russia and Ukraine, and it's about the Fed. What does this mean? This means that the war can spike a recession, like I mentioned just before, and also the Fed, they're going to be raising interest rates. They already mentioned this in the previous meetings that they had, like last month and the month before, because inflation is so high. It's at 7.5%. This just came out, I believe, last week, and it's the highest it's been since 1982, I believe, somewhere around there. It's been a while since inflation's been this high, and they need to combat that. They also said the Fed said that they're going to try to do it to not hurt these markets. And they don't really care about these markets, but they have to say what they have to say so it doesn't completely crush the market. And that is why Bitcoin is potentially falling, and same with the NASDAQ. And the overall stock market in general is having a decent-sized pullback. And we could definitely come a lot farther if these concerns do keep going, and if the Fed actually decides to raise rates higher than what they're saying. That can be a really big catalyst to drop this market. They're also saying the challenge is that even the worst case scenario were to happen, it's hard to gauge exactly what impact it would have in the long-term market. So basically, they don't know what's going to happen long-term. Nobody does. Nobody's a wizard. Nobody actually knows what's going to happen long-term. So if you're just dollar cost averaging, best kind of situation for long-term, and forget about it if that's really what you're worried about. But if you want to be really in-depth, there's a lot to keep up with. It's very hard to keep up with it every day. I've been in with the news articles all the time, so I'm kind of up to date with what's happening. But that's just something to keep in mind. Yahoo Finance, good place to read stuff. So another thing I want to go over here is Forex Factory, and it tells you all the news releases of USD. I personally have USD. I don't really trade Forex anymore. I just focus on USD and what's happening with the dollar. But retail sales, basically all the sales, and they've been coming out pretty well based on the forecast. 3.8% higher than the previous month. I keep an eye on that. Inflation, not inflation, no. Unemployment has been higher than expected. It was expected 217K. It came out at 248K. And the previous month, the previous week on the 10th, it came out to be 223,000 reports of unemployment. Before that was better than the forecast. Overall, it's not too bad. If you go over to unemployment in general, it was high peak of COVID, as we all know, but it's definitely lowered since then. We're not rising up, we're actually coming down on this curve. So that's good to keep an eye on here. This is on Google Trends. Existing home sales, those came out today. Those were a lot higher than expected. That is definitely, these are all good catalysts to keep an eye on to base the economic health. Based on the selling of the homes and the retail sales and the unemployment, it's really not that bad. Our economy isn't that bad, and I believe the market is just falling based on the fear of the Fed and what can happen with them, and also the fears of Ukraine. So really, I don't think there's too much to be worried about. I didn't sell a lot of my stocks. I still own and I still buy time to time. I'm waiting to get a really good buy opportunity if the market actually does drop, and if Bitcoin does come to 20K, I'm ready to load in. So I'm not all in right now, but I'm just sitting and just watching and really staying up to date with what's going on. So if you guys have any questions, let me know. Please leave a like and a comment, and hope all you have a great day and stay good with your investing. Take care.